Hey YouTube, this is Martin Day Trades. I'm having some technical difficulties today. I already made this intro video um, earlier, but it didn't save correctly for some reason on my phone. But now I'm doing it with my webcam. Um, so I just wanted to tell you guys, I'm doing a recap of my NASDAQ trade. It was a one-to-one risk to reward. Today's January 18th. The trade was January 17th, Friday, and I'm gonna make this intro real quick. The London was the move. Um, there was a small retracement to go test back at highs. Big move, but it was a London move. With that being said, I'm gonna go straight to the video, the charts, and just show you guys exactly what I'm talking about. I'll see you guys in the next clip. Hey YouTube, as promised, I'm gonna break down my NQ, also known as NASDAQ trade. You can see where my entry was. It was right there. Price had a squeeze up going into 930, 915. Started coming down. I'm gonna go to the 5-minute chart. And a little bit better. It was right about right there. Okay, so when price came down, the reason I got in on this trade is because London had this move up, and I did a Fibonacci retracement from this low right here to this high right here. I technically could have done it from this expansion from this point to that point. Let's see if I can do that. And it would have went to the 50%, but I did it from here to there. From here to there, and it went to the 38% fib. 38% fib lined up with the 500 level, which was about right there. And I was like, okay, well, it had the move up already. The big move was from London. If you got in at, and I know a guy who Bells, what's his hashtag? No Limit Bells on Instagram. He made his biggest day trade in his career, made $20,000 from that move, as you guys can see from here to there. Caught the whole move. No, he didn't catch the whole move. He got out at the 500 level around there, so he caught all of this, and I believe previous day high. So he got out around this area, around in this area right here, as price was squeezing up going into the market open, you know, because the open was like right here and then it shorted. So someone could have gotten in at, there was no indicator for a short anywhere in this area. I guess as price came down here, you could have had sell limits right here to right there. But what I did was like, okay, well, it's already bullish. I'll catch a move up. So I got in here. I risked $1,000 to make $1,000. Originally, I wanted to make 1,500, which I would have only needed 75 points. Came up, came down. If I would have moved my stop loss to break even at this point right here, it would have stopped me out here right before the move up to get to my 1 to 1.5. That would have been $1,500. I can't make more than $1,500 on a challenge account because of the consistency rule. But it would have came back down and then gone up. Even for a 1 to 2 trade, like this would have been a nice 1 to 2 trade right here. Could have got in, held it, kept the stop loss here. Now, if you're wanting to cut risk, you could have, you know, gone to, you know, 25, 30 points here. Let's see if 25 would have, yeah, so 25. You got in at the 500 level, you could have reduced risk by half. So instead of risking 1,000, you could have been risking 500 for 25 points for this move here. $1,000 for 50 points. If you're trying to get this 100 points right here, would have been $2,000. Let's say you went to TP3, right? TP3, which would have been right there. Let's go. You would have had okay, 2.5 would have been right there. It's risking 1,000. You would have made 2,500 for this move from right here to right there. And for TP3, you would have had to hold a little bit longer into the day, but it would have gotten ran right there. So yeah, there's this move. It took a while longer from, you know, 9:45 to 120. You would have had to held that for 10, 50. Okay, so 9:35, 9:35, 9:45, 10:45, 11:45, 12:45, 1:45. About 3.5 hours. About 3.5 hours to 4 hours would have had to hold this trade, but you would have walked away with $3,000 risk, or it's a risk of 1, 2, 3. If you risk 250, you would have walked away with 750. You risk 500, you walked away with 1,500. You risked 1,000, you were walking away with 3,000. But this is the trade I took today. It was a dub. I did win, but I only took TP1. So I made 1,000. I risked 1,000 to make 1,000 on this trade right there. There was my risk to reward. Only reason I did that was because $1,000 for a $50,000 account is excessive. That's 2% of the account, and I wasn't too comfortable holding the trade. This could have kept continuing to go down lower into these areas right here. Let's go to the 1 hour, into this fair value gap. So as this candle printed at 9, it created a fair value gap in this range right here. And price could have came down and tapped the 50%, which would have been right by my stop loss. Right, my stop loss is at 450, 50% is at 465. That's really close. Or it could have came back down and tried to tap, you know, just take this liquidity between the 62% or any of these levels here. And I just wasn't, you know, anywhere within that fair value gap right here. And I just wasn't comfortable. Now, remember guys, I do mark up my Asian session range box here. Asian session low, ASL, Asian session high, ASH, previous day low, previous day high, which was right there, Asian session high. And it did come down and then go through it. The target higher time frame was in this area right here. Let's see if I can do a Fibonacci retracement from this to this, and it did tap that 79% to the T. So this is where targets are important, guys. You could have done it from here to here, and for this particular day it still needed to tap the 79% fib. So coming into London, you could have got in here and held it to this 79% level. So let's just say got in anywhere within this range right here, or at the break of this Asian session low. So that wick right here, right there, could have been the entry at 300, around 300. Could have got anywhere in this range right here at 315, 320, even 330. Got in for that trade. Had a 50-point stop and targeted that 79%. If you're bullish for the day and you knew that 79% was the next sweep high, you could have targeted it. And right there is this line is the 79% fib. Right there, you can see that. Let me see if I can do something real quick. Let's bring that in a little bit. Right there. Okay, so it tapped the 79% fib to a T and went past it, which this trade would have been a 1 to 6. If you wanted to hold it a little longer, 6.5, 1 to 7 maybe. Yeah, that would have been a 1 to 7 right at the wick right there of the high. But 1 to 6 is still pretty good. Right there, right before the 79% could have scaled out. Risked $1,000 to make 6,000. Is this 1 to 6 multiple of 6? So you risk 500, you're making 3,000. You risk 250, you're making 1,500. You know, so it happens more often than not, these trades, guys. This was a London low move. Where are we at on time? 9 minutes. So with that being said, this is the trade I got. If you guys were looking for the YM trade, just wasn't, there was, you know, 930s right here coming into, you know, it's already squeezing up from the London low here. You know, could have got anywhere in this range right here during London. Maybe this retest of this right here at 43,500. That's a big figure level. That could have been the entry. You know, so 43,500. You have to be trading during that time to catch it, okay, or being aware. That's 1,000 points. We're not doing that. 550 points. We'll risk that. You know, like $1,000, $500. You know, and it's a 1 to 7 risk to reward. So both NASDAQ and Dow Jones had a 1 to 7 move. Friday, great day for someone to have capitalized on that. Most people would take 1 to 2s, 1 to 3s, walk away. If you're in a challenge, you're going to have to do that. There's a consistency rule. But once you're funded, you look for those moves, those where it could target it. Let's go to the 4 hour and just see if we can do a Fibonacci retracement to see if that lines up with the 79%. So this expansion right here, because this had a move up, so this moved down to this low right here, right to the 79%. Okay, guys. So then my fib from here to there, and here to you know, from there to there, and you can see that it went higher than that. Now, if you wanted to scale out at that 79%, that would have been a 1 to 5. But holding it could have easily gotten a 1 to 6 at 800 level right there. Targeted the 800 level, that would have been a 1 to 6 big figure. You just, you know, there's different targets, different reasons to get out at certain levels. But this is Martin Day Trades. This is my market breakdown for NASDAQ and Dow Jones. Like, comment, subscribe, please, guys. I'm wanting to show you guys how I trade. Been doing this for 5 years. The first 2 years I was scalping stocks in the stock market, penny stocks, also known as momentum stocks, with another group, but I couldn't get that. It was too crazy for me. There was no personal connection there to have a mentor. I found a good mentor. He started trading Forex on MetaTrader 5, MetaTrader 4. And we now are moved on to futures that are regulated through Top Step, CME Group. And this is a way better way to trade because you could place trades through TradingView. This platform, this screen that you guys are seeing, I could place a trade, go to create new order, and I have to log into my broker. But a window would pop up right here, and I could change the numbers, the contract sizes, stop loss, take profits, limit orders, all that jazz, right? But guys, like, comment, subscribe. If you have any questions, write a comment, and I'll get back with you guys as soon as possible. Once again, you can follow me on Instagram, martin.daytrades. Follow me, and you guys will see a little bit more into my life. My goal this year is to just make payouts, get payouts, be consistent, show you guys. I did use TradeZella to record. I told you guys in the opening video. I just want to show you guys that I did do that. If this loads, we're at 13 minutes. I'll make this quick, guys. Okay, I'll give it 5 seconds. If it doesn't, you guys have to take my word for it. All it is copying and pasting this. You just go to, I traded NASDAQ, go to the 15, NQ, and you just copy image and then go to, oh, okay, so daily journal, it's finally loading, guys. Go to the 17th, view note, and there it is. So it only goes, you know, from what the trade that I took. It is not the whole day, which actually, you know what, I will add this photo. You guys are seeing this now. Paste. so that it sees the whole rest of the day. Because wait up, that's not the right one. Okay, you guys are seeing me do this right here, guys. Let's get rid of that one, and I want to zoom in on the actual this one. Let's get rid of that. Too much noise. Too much noise. Fair value gap. Get rid of that. Okay, I want to actually do this. Go to 1, 2, 3, and do this because I want to see how the trade actually played out for the rest of the day. If I was just fearful to get out at this moment, which I was, but I also didn't want to take a loss if it came back down. I wanted to lock in profit. Save. All right, cool, guys. Martin Day Trades. Like, comment, subscribe, and I'll see you guys tomorrow.